Welcome to your ultimate guide to day trading. A world as thrilling as it is unpredictable. Whether you're looking to turn a passion for finance into profit, or just want to better understand how real traders make decisions. At the end of the video, I'm going to share 2 of the most important tips with you. And I might drop a few extra tips somewhere in between too. So make sure you watch till the very end. What is day trading? Day trading is the act of buying and selling financial instruments, like stocks, currencies, or options, within the same trading day. The goal? To make quick profits from rapid price movements. Unlike long-term investors, who may wait years for their analysis to pay off, day traders need to act fast, using technical analysis, news, and market trends to inform their strategies. All positions are closed before the market ends for the day, which helps avoid the risks of overnight events. Why, and why not, day trade? The appeal: unmatched flexibility. You're your own boss. Work from anywhere with a laptop and Wi-Fi. No overnight anxiety. Positions are closed out by the end of the session, reducing the risk of after-hours shocks. Immediate feedback. Wins and losses come fast. Each day's trading is a fresh chance. The risks: high pressure. Constant decision-making under time pressure requires strong nerves and intense focus. Potential for rapid losses. Just as quickly as you can win, you can lose. Statistical odds. Many beginners lose money. Only well-educated, disciplined traders have long-term success. Think of day trading as a high-speed chess match played with real money. Preparation, discipline, and constant practice are what set successful traders apart. Key day trading concepts. Let's break some of the jargon down in plain English. Liquidity. How easily you can buy, sell a stock without affecting its price. Day traders want highly liquid stocks so trades can be entered, exited quickly. Volatility. How much a stock price moves during a day. High volatility means more profit potential, and more risk. Leverage. Borrowing money from your broker to increase your position size. Leverage amplifies both gains and losses. Margin account. Needed for day trading in the US. Enables leverage, requires maintaining a minimum account balance, often $25,000 for pattern day traders. Pattern day trader rule. If you make 4 or more day trades in a 5-day period, you're subject to additional equity requirements. How to start? Step by step. 1. Learn the basics. Before risking real money, study how the markets work. Focus on stock market mechanics, order types, bid, ask, spreads, basic technical analysis, reading charts, trend lines, support, resistance, trading psychology, controlling emotions, discipline. Use free or paid online courses, check active YouTube channels, or dive into books on trading. 2. Choose a brokerage platform. Select a broker with low commission and margin fees, fast, reliable order execution, robust charting and analysis tools, strong customer support. Examples include TD Ameritrade, Charles Schwab, Robinhood, and Interactive Brokers. 3. Use simulators before trading real money. Demo accounts let you practice in real market conditions without risking your capital. Enter and exit mock trades, test your strategies, and learn from losing without real consequences. 4. Develop and document a trading plan. A solid plan should include your risk tolerance and maximum loss per trade per day. Trading hours. Some focus on the first, last hour of the market, entry and exit criteria for trades. Preferred strategies and stocks to target. Tip: never trade on gut feel. Write down your plan and stick to it. 5. Start small. Begin with limited capital and keep position sizes manageable. Treat early days as tuition, a learning phase. As you build confidence and consistency, you can scale up. 6. Review and refine. After each session, review trades. Which worked, which didn't, and why. Were losses due to market conditions or emotional lapses? Refine your strategies, but avoid impulsively changing your plan after each loss. Main day trading strategies. Let's break down a few of the most beginner-friendly approaches, using easy-to-follow, real examples. 1. Scalping. Goal: collect many small profits on tiny price movements, often within seconds or minutes. How? Repeatedly buy and sell a stock that's moving within a tight range. Example. You spot Acme Corp is bouncing between $50.05 and $50.15 every couple minutes on high volume. You buy 100 shares at $50.05, set a sell order at $50.13. The price creeps up, your sell order fills. Profit, 100x 8 cents smiley face, $8 minus commissions. Repeat as opportunities arise. Consistency is key, but losses can add up fast if a stock suddenly breaks out of its range. Scalpers need to exit quickly if a trade goes the wrong way. 2. Momentum trading. Goal. Jump on board a stock when it's moving fast in one direction due to news, earnings, etc. How? Use technical signals, like breakouts above resistance, and news scanners to identify likely strong moves. Example. Biomed Co. announces positive drug trial results pre-market. The stock opens at $36, breaks its previous resistance at $37 with heavy volume. You buy at $37.20, aiming for a quick ride up. It surges to $39.20. Sell order fills, $2 per share profit. Be wary. If news hype fades suddenly, the price can reverse hard. Always use stop losses. 3. Range trading, swing trading. Goal. Buy near support, sell near resistance, or vice versa, on stocks that consistently bounce between defined levels. How? Mark support, where price tends to bounce up, and resistance, where price tends to drop, on your charts. Example. Tech Tools has been bouncing between $80 and $83 for days. You buy at $80.20, near support, set a sell order at $82.70, near resistance. If it works out, you pocket $2.50 per share. Remember, swings are fast. If price breaks through your support or resistance, get out quickly. 4. News-based trading. Goal. React to news-driven volatility, earnings, mergers, FDA approvals. How? Monitor news feeds and social media for market-moving headlines. Example. A company gets unexpected FDA approval at 10 a.m. Price gaps up from $41 to $47, massive buying action. You quickly buy at $47, set a tight trailing stop as the price climbs to $51. Stop triggers. Locking in a $4 per share gain. The price reverses after the initial excitement. This strategy can be lucrative but is extremely high risk. Prices can reverse in an instant. Technical analysis. The day trader's toolkit. Technical analysis is more than just staring at charts. It's the bedrock of most day trading. Key tools and concepts. Candlestick charts show you open, high, low, and close prices in a given time frame, essential for visualizing price action. Moving averages help identify trends. Traders might look for when the price crosses above or below its moving average to spot entry, exit points. Volume confirms the strength of a price move. Volume spikes can indicate big players entering or leaving a trade. Relative Strength Index, RSI, tells you if a stock is overbought, potential sell signal, or oversold, potential buy. Pro tip. Don't get lost in indicators. Pick 1 to 2 and master them before adding new tools to your toolkit. Realistic example. A full day in a beginner's shoes. Let's walk through a fictional but realistic day for Alex, new to day trading. A. Preparation. 8:30 a.m. Checks overnight news, pre-market movers. Reviews the economic calendar, no scheduled events, good. Picks 3 stocks with high volume and volatility to watch. B. The first trade, 9:35 a.m. Innovatech, opens with a gap up after earnings. Alex watches the price pull back toward pre-open support, $44.20. Buys 100 shares at $44.25, places a stop loss at $43.80, and plans to sell at $45.10. The stock bounces, hits $45.10 at 10:01 a.m., Alex sells. Result, $85 profit minus commissions. C. 1 loss, 10:30 a.m. Spots, SolarFlex, moving sharply, tries to scalp a fast bounce, but the price reverses. Buys at $59.95, sets stop loss at $59.55. Gets stopped out as the price slides. Result, $40 loss. D. Stepping back and learning. Rather than chasing the loss, Alex reviews the mistake, jumped in without confirmation. Takes a mental break, resets, and waits for another clear setup. E. Afternoon trade, 2:15 p.m. Fin well, is forming a clear range. Bounces off $12.80 4 times in the past hour. Buys at $12.85. Target exit at $13.20. Price spikes. Alex sells at $13.21. Result, $36 gain. F. End of day review, 4 p.m. 3 trades, 2 wins, 1 loss. Total profit, $81, before fees. Journals each trade's logic, emotions, and lessons learned. Common pitfalls and how to avoid them. 1. Overtrading. Many beginners take too many trades per day, confusing activity with results. Focus on quality over quantity. 2. Ignoring the plan. Deviating from your strategy during heated moments leads to bad decisions. 3. Letting emotions take over. Revenge trading. Trying to win back after a loss is a killer. Learn to walk away and reset. 4. Using too much leverage. Leverage magnifies everything. Start small and only increase size as you prove yourself. 5. Lack of ongoing learning. Markets evolve. Stay sharp with self-education and review. Essential day trading rules for beginners. Never risk more than 1 to 2% of your account on a single trade. Set predetermined stop losses and targets for every trade. Stick to your plan. Do not chase moves or act impulsively. Focus on 1 or 2 markets or stocks until you master them. Document each trade. Review your journal regularly. Take regular breaks to prevent burnout. Invest in a reliable trading setup, fast PC, multiple monitors, stable internet. What no textbook tells you, every seasoned trader will tell you. Your mindset matters just as much as your method. You will have losing days. Even the best lose. What matters most is keeping your wreckage controlled. Focus on learning, not just earning. In your early months, don't make profit your only metric. Measure progress by your consistency. Stay humble. Pride leads to overconfidence and blown accounts. Community helps. Find online forums or local groups. Discussing trades and psychology with others accelerates growth. Remember, each day is just that, a single day. Take defeats as tuition, savor your wins without boasting, and keep your focus on the long term. Next steps. So, you've learned the basics and seen real examples. Here's a practical plan. Watch real-time market activity, not just historical examples. Try paper trading daily for several weeks. Set specific, written rules for entries, exits, and risk. Track your progress, review, adapt, repeat. Never stop reading, practicing, and connecting with other traders. With a thoughtful approach, self-discipline, and honest self-reflection, day trading can open new doors. Just remember, there are no guarantees, only probabilities. Your greatest asset on this journey will always be your ability to learn from each day, stay humble, and persist with intention and care. Happy trading. May your journey be profitable and, more importantly, full of growth and wisdom. This detailed guide brings you practical insights, relatable examples, and actionable steps for your first steps in day trading. Grounded and trusted financial education sources and real trader experience. 1. Practice first. Don't risk real money right away. Before jumping in with your hard-earned cash, take the time to use a demo, practice account where you can make trades with virtual money. This lets you learn strategies, make mistakes, and build confidence without any financial risk. Practicing in a simulator helps you spot patterns and avoid costly beginner mistakes once you do start trading with real funds. 2. Keep a simple trading journal. Learn from every trade. Start tracking every trade you make. Write down why you entered, why you exited, and what you felt during the process. After each trading day, review your notes to find what's working, and what's not. This habit turns every win and loss into a lesson, accelerates your progress, and helps you stay honest with yourself. Most successful traders, even after years in the business, still keep a journal to keep improving. These tips are beginner favorites because they make the process less stressful, keep you safe from big losses, and help you grow step by step as a confident trader. If you liked the video, make sure to like and subscribe. And if you have any questions or issues, feel free to let us know in the comments.